Well, good evening, everybody. Blair Nightingale here, October 30th. Can you believe it? October 30th, 23. It's going to be 2024 before we know it. But we got a little bit of time left, and historically, into the fall, especially October, September, later into October, we tend to see a fall in the stock market. And we talked about this months ago. Hey, we'll have to just wait and see. Is this going to happen this year? It doesn't happen the same way every year, but there are probabilities based on how many times it's happened in the past. Well, we certainly have seen that here in 2023. So welcome. My name is Blair Nightingale, your host here on Market Monday. We got folks coming into the class right now. We're 6 p.m. Central here, YouTube, Facebook. If you're friends with us out there tonight coming from either one of those, welcome, welcome. I know we'll be having a lot of you guys watching. In fact, historically, the majority of you will actually watch this on the recording. Of course, those of you who are with me live have the ability to chime in. Let me know who you are. Send in any questions, thoughts, comments, concerns, whatever it is. You can go ahead. You can send that in to me as well. While we are on here, chances are if you've got the question, somebody else has got that question too. So you can go ahead and drop that into the comment box. Like Mr. Steve Campbell right here, jumping in, beating everybody to the punch, saying, "Hey Blair, hello to you." Steve, I think it's colder in Dallas today than it is for you out where you're at. I'm not going to say it unless you say it. I know where you are though, but it's shocking. It's colder here than a lot of places in the country. So we're definitely seeing that. It's good to have you on here, Steve. Everybody else, we got people coming from all over the country, right? Tradeway is truly coast to coast in our student body. And of course, we've got folks who are going to be joining us here tonight. Hey, maybe you've never been here before. We're going to come on and we're going to talk through the markets, right? We're just going to get an update on what's going on in the stock market right now. We're going to give a little bit of a trading perspective, okay? Not just an investing long-term perspective, but we try to give both here. The first thing, of course, to account for is that there is a difference between the two. It's not the same skill set. And I was going to say accounting. We just have to account for it, right? The investing versus the trading skill set. Two different things, okay? Two different things. It's in the same world, but it's not exactly the same skill, right? Manuel is joining us first time here on YouTube. If you're on Facebook and YouTube and you haven't yet, click that like button and we will update you. We will let you know anytime we've got something coming up through the week. We've got programming Monday, Tuesday, Wednesday, Thursday, all the way from great Bible teaching to market updates to live trading hour that we're going to do on Thursday. So click that like button if you haven't. You can also ring that bell and subscribe on YouTube. You won't miss anything. So we'll let you know what is coming up. All right. Well, guys, first things first. We are in the middle of earnings season. Now, one of the things we talk about, I taught one of our step one classes this weekend, Friday, Saturday here, right online. You can always go to tradeway.com/events and sign up for the step one Start Your Journey class. If you don't know the foundation, even if you're in one of the advanced options classes, you know that what we teach in that first class, step one Start Your Journey, right on Tradeway's website there, it's the foundation for every other strategy that we use, okay? So it's not the boring beginning stuff. No, it's great for us to use at any level of our trading. So I was teaching one of those on Friday, Saturday, and one of the things we were talking about is the market tone, not just an individual stock. Okay, it's fundamentals, not just an individual stock, what's happening on the chart, right? We're looking at a stock chart on the screen right now, but also what's the tone? What's the overall tone of the market, right? I don't want to find myself trying to swim against the river all the time. So the market tone is something that we spend a good amount of time updating you on here for the Monday night. Now, of course, with our students, we're going to do this all day, every day throughout the week. We get to do that together here on Monday nights. But the idea, of course, is that rising tides tends to raise all boats. And of course, the opposite is true. When the tide goes out, they tend to go down, right? So we want to understand what's the momentum of the market. Part of that is understanding the news. Now, financial news for both the trader and the investor are important, but they're important in different ways. The news for the investor, okay, is to discern, right? Discern, not guess, not fortune tell. Okay. Jamie Dimon from JP Morgan Chase said last week that basically Blair's paraphrase is, we ought to not put as much stock, pun intended, into what the Federal Reserve has to say in their projections. Because remember, a year ago, they were 100% wrong. 2 years ago, they were 100% wrong. Right. They said that inflation would be transitory. They were 100% wrong. Now, I have lots of thoughts on why they were saying transitory. I'm not even convinced that they actually believe that. If you don't know what I'm talking about, basically the reason our interest rates are going up so high, see home loans here, right, is that they're raising that federal funds rate, right? They're trying to cool down the economy and they make it a little bit more difficult to move money around. And so that's one of the levers they can pull. But the point is that they said inflation would be transitory and it has been anything but. They've been completely wrong. So we don't crystal ball on the news. That's a mistake a lot of people that a lot of people make. They think if they read enough financial news, then they're going to know the future. Well, there's a fine line there, okay? Because you can get if you will, signs of the times. What's the tone? I tell our students, we don't do market guess. We don't do market prediction. We do market tone. What's the tone? And the tone is the direction of the river. Then you and I can go out and when we're trading and investing, we can go, am I really in the direction of the river or not? Many people made many dollars in bull markets only to give them back when the market shifted. They didn't understand market tone. They thought they were a genius because everything in the market was going up and they made money doing that. But when the tone changes and they don't recognize it, they don't understand why it was working. And so they don't understand why it's no longer working. So when you and I go out to the news, one of the things we want to remember, this is with our investor hat on, is that the news doesn't tell the future, but it does tell us what's the one main news item out there that I ought to be paying attention to. Occasionally it's two. But really the majority of it for the overall market is just extra noise, okay? There are some interesting things. I've heard even another trader that I really respect say, I just go out and read the headlines. I don't even read the article. I just read the headlines. Unless it's that one main news item, then I'll dig a little bit deeper. And I agree with that. And right now, by the way, it's interest rates. Okay. I said it's maybe one, sometimes two. Right now, you could say earnings. Okay. It's earnings season. And so that's significant for the investor. We need to see, are companies by and large across the US economy, are they making money or are they not? So if you're not familiar with that term, every year, 4 times a year, every publicly traded company is going to report earnings publicly. Most companies do it around the same season 4 times a year. Okay. Some are a little bit rogue. They're rebels. They do it on their own time, but a lot of them do it during earnings season. We are in earnings season. So the big one this week is Apple. Apple will be reporting on Thursday. So that'll be a big one to watch for. In fact, if we go on over just in our software here, we can go over to Apple and you'll see right here, okay, AMC, that tells me after market close. Okay, after market close, we'll see the earnings report from Apple coming out. Starting to put in a little bit of a bottom here. I'm kind of interested. Honestly, let's just do this live. Why not? I want to see what happens if I really flatten this out kind of like that. I'm going to get rid of this line. And we're just going to come in here. Oh, no, let's save that. We're just doing this on the fly, guys. Now, the earnings report's going to come, and I'm not really going to pay too much attention to the pattern here because earnings is different in terms of the way the trader looks at it. I just said earnings season, big news item for the investor. It's still a big news item for the trader. What's the difference though? The trader isn't trying to gauge the long-term macroeconomic implications of whether or not companies are making money. If you've got a bunch of money in a 401k, an IRA, a retirement vehicle, whatever it might be, maybe you've just got it in an account of your own, you're self-directing your money. You even if you're not, and it's not, and if you've got money long term tied in the market, then that long term projection actually does matter. Now, we can't guess in the long term any more than the short term. We can look at interest rates, that matters. We can look at the pattern of the S&P 500, that matters. We can look at our own personal investment plan and say, all right, where am I actually looking to protect my capital? You don't just have to go to cash. There are other ways to protect your money without timing entries in and out of the market with long-term buy and hold money. Okay, we have different philosophies here at Tradeway for active management of long-term assets. But one of the things we have to understand is as we shift over to the trading side, okay, earnings reports, Fed reports, things like that, they matter, but they don't matter in the same way. Earnings reports and big news events for the trader are important because of how they gauge volatility. The long-term investor is looking down the road to say, all right, where do I need to protect myself? What are my projections as we go forward? What do I need to see on the long-term charts for my money, assuming I'm taking any active role in that planning whatsoever? If you're just thinking that your long-term advisor is going to be thinking through all this stuff for you, there's a good chance that's not happening. And I can say that confidently because I've been all over the country. I talked to a lot of people and I've seen a lot of accounts where that's not happening. Okay. On the other hand, the trader's going, all right, I don't know the direction of Apple on Thursday. I just know it's a big volatility event. So we actually have rules in our system around earnings so that we aren't getting caught in that kind of volatility. At some point, traders like volatility. We need volatility to make money in the markets, but there is a threshold. There can be too much volatility, too high. And when that happens, then we need to manage risk because, of course, that is the job of the trader, is to manage risk. That's what they actually get paid for. People think trading is a bunch of people who've decided that they know how to tell the future and that's their job. But that's actually not true. You've heard me say that on here many times. That is not the job of the trader. The job of the trader is to manage risk well. Okay. So understanding how news affects volatility is very, very important. Okay. Now, market tone includes the news, but also what's the direction of the S&P 500? Here at Tradeway, we primarily, not exclusively, but we primarily focus on the S&P 500, okay? We also, you can see I've also got the NASDAQ on here as well, so we'll follow the NASDAQ. The NASDAQ was in a nice little wedge pattern here, and then it finally broke out. And now we're waiting to see on this gap line, 5-day moving average, this trend line I've put in here. Are we going to see the kiss goodbye? Same thing on the SPX, which is the ticker for the S&P 500. That kiss goodbye, we don't know. I told the students this morning, you don't know if it's going to fail at the old support line, new potential resistance, but we ought to watch. It's not about knowing whether the line, I can't hammer this enough, guys. It's not about knowing whether or not the line is or isn't going to work. It's about knowing the momentum of the pattern. It's about managing the risk with a good trading plan, applying the right strategy in the right place, and then knowing where on the chart should I be watching for pivots. It's not about guaranteeing that you know where the pivot's going to happen, but you know what you're going to do when the market does whatever it's going to do. So one of the examples here is hey, we don't know, but we broke support. We're pulling up into support. Old support could be new resistance. Let's see if we get a drop off of the 5-day moving average. Now, if the market is waiting more for that Apple, right, report, which, we got 2 full trading sessions till then. So I'm not convinced the whole market's going to be on pause tomorrow waiting for Apple. But it's possible. It's possible that we see a little less action here as maybe something like that comes through. However, we've seen some big tech earnings already. Google, a big disappointment last week. So we'll see what happens here, if maybe they can flip the script on that a little bit. If Apple were to miss pretty big for some reason, which is not expected, I could see the market definitely failing in this zone here and moving back. You can see we got down to this 4,100 level, nice round psych level, not uncommon to see something like that. Certainly not a magic number, but they're no doubt they're numbers we want to watch. We've got a significant amount of support from previous history in that area. Well, so it brought some of the buyers in. and we're up into that 5-day moving average. Maybe see that kiss goodbye, or what some call the kiss of death, where it breaks that level, comes back up into the support, and then falls from there. You say, Blair, you're talking fast. What does that mean? What does it look like? What's that? Nope, that's not the one. But I believe it's actually on this one here, right? Trending breaks down. There's a reversal, and it comes up. Old support becomes new resistance. Old support becomes new resistance, falls off of that line. Okay. How far does it fall off that line? What do we do? What strategy do we use? All those are questions we need to explore at a later time, but it comes up into that line. I didn't move that line. It's not that it always necessarily perfectly hits my line, but it often does. Charting works. Okay. Anybody who tells me charting doesn't work, I disagree. But it does definitely come up into that 20-day moving average as well, right in that area, and then just had a nice drop today. So if we can continue to see a little bit more weakness in tech, we talked about that Magnificent Seven last week. If you haven't seen that, is it possible that there are basically 7 stocks in the S&P 500 that are holding up the entire index, right? Or at least holding up the majority of the S&P 500 index? Yeah, there is. Do a little research. Magnificent 500. In fact, all you got to do is go to last week's episode, right, where we talked about it, because we went through what it is there. Could 7 stocks be responsible for an enormous amount? We've basically got 7 stocks that when you look at just those 7, they're up over 55% year over year. But when you look at the remaining 493 stocks in the S&P 500, they're up about 4%, maybe almost 5% for the year, okay? Barely in comparison. So you look at the overall index and where it's at versus where it would be without those 7 stocks, and it's pretty stark. And the main thing that we highlighted is that all 7 of those stocks are in tech. They're in the tech sector, okay? Which is the chart, of course, you're looking at right now, is the NASDAQ 100, largely representative of the tone of tech when it comes to the price action, okay? We could go over to something like the XLK as well to look more specifically at the S&P technology sector, where you've definitely got more of this. I'm going to go ahead and put my line in here, where you've got more of this downtrend that you can certainly see there, which is very similar to what? The downtrend you see on the S&P 500. So it's definitely running in tandem. I think it's kind of interesting for an industry that, at least when talking to Main Street, right? When Wall Street's talking to Main Street, industry experts seem to major on major diversification. Then I look at the index here and I go, I don't necessarily see major diversification when you consider that 7 stocks have that much influence over the entirety of the S&P 500. So that's definitely interesting to see for sure. All right, so that's what we covered last week. So if you didn't catch that, you can always go over there and you can see that as well. But we are still looking at a downtrend, okay? We're looking at bearish patterns, okay? 3 core level bearish patterns that we look at. Bearish downward pressure. Sellers are in control. Moving down, lower highs and lower lows. That's the definition of a downtrend. So we've got a downtrend in the S&P. Now, the S&P doesn't tend to hold a downtrend for too long, okay? But there's no denying, right? We switch to a weekly view. That's what I've got here. I've got a downtrending movement in the market. That's number one. Number two, we talked about this as well. You've really got that double topping M pattern in here. Okay. We had some live webinars with our students we talked about a few weeks back as this was happening. I have the pleasure of being on with everybody on Wednesday, which put me right on this day right here. So coming up into the 50-day, dropping, double topping at the 50-day. What's a double top? Well, it topped twice, right? It's double. So it came up and it failed. When it breaks, there's rules that we have around this particular pattern, how it works when we do entries and things like that. That's part of that system that I talked about that we need to learn, okay? I'm talking momentum and tone here tonight. It falls all the way down to support. The first thing we wanted to watch was support, then the 5-day. It comes down and fails. So that's the second pattern, downtrend, double top, M. Some say M for murder, right? The stock gets killed. Yes. All right. It breaks support, comes up. Maybe we get that kiss of death. That's another bearish pattern. Now, we don't have a confirmation on that yet. We'll see if things remain. Certainly, world news, the tone is decidedly negative. But we have to remember that Wall Street, even though the individuals on Wall Street may care about certain items of news, geopolitical concerns, political concerns, all that kind of stuff, that doesn't necessarily mean that Wall Street cares in the sense that they'll buy and sell. They'll buy and sell on news that they feel like gives them an opportunity or brings up risk for their assets. That's when they buy and sell. Okay. There's not a lot of just, compassion buy and sell going on Wall Street because it's not affecting necessarily those assets on Wall Street. So that's an important thing to remember. There's a lot of bad news, but that doesn't necessarily mean it's going to affect the market per se. Okay. We need to know what are those main news items. And I told you right now, it doesn't always stay the same, but right now, primarily, okay, it's really still looking at interest rates and inflation. I mean, that's the big topic for quite some time now. And more on the micro scale, we're just passing through that earnings season. I told you, the biggest one, it's not the only one that's going to report earnings this week. So if you're trading and you're looking at specific stocks, make sure you're looking and checking that earnings report. That's really important to be able to do because you can't control the volatility overnight on an earnings report. Okay. You're putting yourself in front of a train that might go this way, it might go that way, and you really can't guess that. Okay. So Stefan says, should we evaluate the big seven differently from the other 493, right, to the near future? I think one of the, an example, should we expect all the others to fall less? Not necessarily. What I want you to be aware of, the first level of awareness here is that number one, the S&P 500, I want people to be aware the index as a whole. Maybe you own the SPY, maybe you're trading the SPY, right? Or some kind of ETF, index ETF, something like that, right? Or maybe you have a mutual fund that's passively managed and it's tracking like an ETF. Okay. Whatever it is, you want to know, okay, this is where these there is a very small amount holding up the whole index. Okay. So that's just in and of itself is risk. That's very significant, especially if you don't know that it's doing that. I think that's important. The second thing I would say is important is your question, should we evaluate the big seven differently? I think in terms of going in and checking, for example, okay, last week I went in and I charted each of those stocks. Now, they're very popular stocks, so most of them were charted anyway. But I went in and I charted those stocks to find that 5 of the 7 were in very significant support zones, okay? Those are the kinds of things particularly for the trader, okay, I would want to be aware of. If I'm going in, especially if I am trading something like an index ETF or something like that, I want to go in and go, you know what? I'm looking at this on a Thursday night. And 5 of 7 of these stocks are at a significant support zone, right? A buy zone. If those follow through in the morning and they have that kind of influence over the S&P 500, there's a very good chance that that's going to have a huge influence over the overall tone of the next day, the index moving up. If those are all in significant resistance zones, okay, and I'm looking at a completely unrelated stock, I would want to be aware of that because if those stocks by and large tend to fall significantly at resistance zones, it's going to reflect in the index. Okay. Now, these 7 stocks are not, them collectively don't account for all the weight of the index versus the other 493, but they account for a significant amount, more than you would expect from 7 stocks, to be sure. So if that's dropping off resistance, then I want to be aware of that as well, because I want to know, okay, maybe I need some risk management that's a little bit different. If I'm approaching buying something, perhaps I'm doing options, perhaps I'm buying stock, and I'm seeing those particular technical setups on those 7 or even 5 or 6 of those 7. I would want to know that, similar to how if I'm going to do something on the S&P, I look over at the NASDAQ as well, because even just generally speaking, okay, the weight in the S&P 500, okay, the SPY, I'm throwing out a lot of information tonight, moving pretty quick, but I think we're having a good discussion here. The SPY is it's broken into 11 sectors. The XLK I just showed you is the technology sector of the S&P 500. It's heavily weighted. It's not majority weighted, but it's heavily weighted in comparison to the other sectors. So I do like to go over and see the NASDAQ. If the NASDAQ's starting to fall off a cliff and it really starts to slide, it just takes, eventually it tends to catch up. The S&P, I should say that again. It tends to catch up to the S&P a little more clearly. And I don't see as strong of the bullish action, right? Because there's a divergence between the two. All of this could put forth an overemphasis on charting tech and thinking that the rest of the market has to follow it. It doesn't. But we ought to be aware that in 2023, that's the big player. Those are the mega cap, not large cap, mega cap stocks on Wall Street. They're all tech. So it's worth paying attention to. And of course, that's been our conversation for a few weeks, but it's not all tech. Okay. Financials is big. Communications is big, right? I mean, there's many more, obviously, right? Different, if we go over here quick, you'll see these 11 sectors right here. And of course, they're in the heat map right down here, right? They're big. But again, in the SPY, the ETF, it's one of the most highly traded securities on the planet. That is largely weighted, or more heavily, I'll say, weighted towards technology. So it's worth looking at. And certainly those 7 stocks are. And I think in that way, Stefan, that would be a way that I would pay attention to those. Okay. You could even put them in a short list. Okay. And just chart them, know where they're at. Stick to the S&P 500, stick to the NASDAQ. But if you know where those are at, I think that's certainly not a harmful thing for a trader to have in mind. And if you're a long-term investor in any of those as well, we don't want to get too micro. If we micromanage long-term too much, we get emotional, and that's a different skill set. So we need to keep the two separate. But in terms of seeing those stocks really begin to fail, if there's a real rotation out of those stocks, it's going to have a pretty significant impact on the S&P 500. We know that because it's already had a significant impact on the S&P 500 to the upside. So who's to say it wouldn't be the same for the downside? Okay, so you would want to know that. And that gets into the conversation of protection strategies for long term. What's your plan? This is what I tell people all the time. You can ask your advisor if you've got one, and if you don't want one, or if you don't have one, right, then this is the question you should be asking yourself. Okay, what's your plan for volatility and bear markets? What's your plan for volatility and bear markets? Okay, here at Tradeway, we want to help equip you so that you have a plan for volatility and bear markets. There's not just one thing you can do. There's multiple things you can do. Okay, there's some things you can do that most folks didn't even know you could do. Right? It's not a secret to the world of trading and investing. It's just a secret to, typical you and me on Wall Street, or on Main Street, I'm sorry. Right? Because the financial industry doesn't really offer those as options, pun intended, when you and I walk into the local whatever money manager might be, right? But I guarantee Wall Street is using different investment vehicles to protect. They're inventing different things so they can do what they want to do with their money. And in 2023, you and I can open up a laptop and have access to all the infrastructure that they have built for themselves. They didn't build it for us. They built it for them. But you and I can learn how to use it. And of course, that's the goal here, right? So, all right, guys, that said, we're rolling right on 30 minutes. I think this is a great place to pause. Till next week, always going to be here for you, 6 p.m. Central Time, Market Monday. Again, like and subscribe, Facebook friends, YouTube friends as well. You won't miss anything. My name is Blair Nightingale. You can always hit me up, support@tradeway.com. You got any questions, concerns, comments, anything you want to let me know, support@tradeway.com. Be happy to take care of you guys. Thanks once again. Watch those markets. Thursday is Apple, and we'll see you next Monday night. Good night, everybody. Thanks so much.